Hello and good day, this is the Daily Analysis. The USOIL and NATGAS D symbols on January 28th in the 4-hour timeframe analysis of USOIL. With the increase in geopolitical tensions in the Middle East, the price of oil is rising. Currently, we can see that the price of oil is in an uptrend and is approaching a certain level. The daily BPR and the optimized 4-hour BPR are bearish, and there is a certain level. It is a unicorn, and with the RSI version, we can see that it has entered a potential zone, which indicates the continuation of the trend. The market has been bullish after a short-term correction. There has been a bullish move upward. Liquidity has accumulated on the buy side, and a bearish divergence has formed. My prediction is that the price will have a short-term correction to the downside. And if momentum increases in the market, it could enter the 4-hour order block zone at the 60.85 level. And if there isn't enough momentum for the move, it can only invalidate the sell side. It will accumulate liquidity at the 62.12 level and reach the 61.75 zone, and after that, it will continue its trend from this area. If the bullish move continues and is accompanied by a bullish displacement, and the price closes above the 64.56 level, it could target higher levels. The next target could be a comprehensive 4-hour rejection block zone at the 65.64 price level threshold. By carefully examining the historical price action movements of oil, we can accurately forecast future trends. We can predict that if geopolitical tensions in the region increase, the price will rise accordingly. The price of oil could reach the 68.52 level and ultimately 70.57. On the other hand, if tensions ease and agreements are reached, the price could enter a bearish phase and move downward toward liquidity, collect the liquidity on the sell side, and eventually reach the 4-hour order block zone. It could react there, as this is a highly significant area for us, defined between the 58.53 level and the 58.0 zone, with a decrease. The price of oil and oil supply could move toward lower levels, reaching even 55 and possibly as low as 54.50. Of course, the overall market outlook is currently bullish, and a downward trend is only a very low probability in this time frame. 1-hour chart of the US oil symbol. Currently, the price is moving in a strong bullish round, with a significant order block zone established at the 62.3 level. This area acts as a key support. There is a CVD divergence. It has been identified, and it is predicted that the price will have a short-term slide downward. Also, by examining the RSI, we see that a negative divergence has been identified there, and the price could move downward. The first price target is the 62.3 level. After breaking the 62.08 level, it could move further down. The next target is the 61.47 level, and finally, with increased momentum, 61 point could be the price movement target, and after that it may continue its upward trend. In the analysis of the NATGAS per US dollar symbol on the 4-hour time frame, the price, after an aggressive move upward, entered a consolidation range, and after a short-term sell-off downward, it collected liquidity on one side of the sell side, and it gathered liquidity at the 5.05 level and re-entered the range, forming a swing failure pattern strategy, in conjunction with an established order block area, after which, with a surge of increased momentum, it ascended significantly higher and successfully penetrated into another distinct order block area. If the price experiences another multiple downward slide, it could look for a strategy around the 5.111 level, a trading strategy to enter a buy position targeting the 5.590 level up to the 5.722 range in the market. Also, if the price is accompanied by a bullish displacement and closes above the 5.740 level, it can continue its bullish trend toward higher levels such as 6.311 to 6.190. It can target these with confirmation on the 1-hour time frame. We can observe the price's range movement. We can see that with the accumulation of liquidity, the price entered a bullish order block zone on the sell side. And ultimately, it is accompanied by positive momentum, which is currently expected to reach the order block zone, to react bearishly. It may have a short-term correction to the downside, and if a trading strategy is identified and the trend turns bearish, we can look at the range from 5.188 to 5.057 to look for a buy position opportunity in the market. If the momentum increases as well, it can trigger buy-side liquidity. It can collect the liquidity at the 5.518 and 5.600 levels and eventually reach the 5.714 level, and if it collects the liquidity and closes within the range, it forms a Ryan Soldier strategy, which with the price closing increases the chances of, after that, we can enter a sell position, set the stop loss behind the swing, and enter the trade with a risk-reward ratio of 1-to-1, 1-to-2, or even 1-to-3. If it also closes above the 5.714 level and the price stabilizes, then this indicates that the bullish trend is continuing in the market and we can anticipate higher price targets for it. Wishing you success and profits.